Hello, welcome to the Collective Shift channel. Matt here to share with you the past week that was in the macro landscape as well as the crypto industry. And it's been a huge week, particularly from the crypto side of things with Bitcoin, Ether, and the entire crypto asset market all at all-time highs at the time of recording. So very exciting time here in the industry. But first, as always, we will get started with the macro side of things, which is becoming increasingly, kind of connected with the crypto space. So just a reminder as to why we always start with that. In particular, as always, kicking things off with Australia. And biggest news from the past week is, again, similar story from past months, really. It's been ramping up this narrative of increasing inflation and what the central bank's response is going to be, and what the central bank's, probably more importantly, what the central bank's interpretation of this rising inflation is going to be. So what do I mean by that? Inflation has been rising, as I've been covering in recent weeks and months. Inflation has been rising all around the world, in basically every economy and country all around the world. And the big debate, I guess the big unknown from policymakers' perspective has been, okay, is this rise in inflation just transitory? As you'll see that adjective thrown around a lot. What does transitory mean? It just essentially means, hey, this inflation, this rise in prices is basically down to things that are just temporary, such as, things that are affected or things that have become a consequence of the global pandemic. So I'm talking about supply chain shortages, and just like restrictions on manufacturing, things like that, as we've seen this year, have really contributed to rising prices. So you've got that side of the argument. Okay, like once this all gets back to speed, like inflation rates will come down naturally because it's all transitory. And then on the other side, you've got this argument that, hey, inflation rates rising is actually not transitory and it's going to be more permanent, or a bit more, I guess, sticky, for lack of a better term, and hard to, it won't really come back down to, more consistent, historically kind of consistent levels. So you've got those two arguments. They're just continuing to ramp up, and I expect to see that over the coming months, really, because it's kind of guiding the whole narrative of the whole macro landscape. So with that in mind, what happened last week for the third quarter, in Australia's case, inflation came out at a 6-year high. It was 2.1%, I believe. Prices rose on average 2.1%, and which actually topped analysts, or the consensus kind of forecast was 1.8%. So just a bit faster than expected, the price rises. This drop of data really happened just about 3 or 4 business days before the central bank, Australia's central bank, the Reserve Bank of Australia, or the RBA, happened before their policy meeting, which is the first Tuesday of every month except January. They got together on Tuesday, and after this drop of data, you really got the market and investors kind of pricing in or speculating that, hey, this faster than expected inflation is going to force central banks, in particular RBA, to really make a statement on Tuesday and kind of, signal that they will increase interest rates or tighten monetary policy via other methods sooner than what they had previously stated. And what happened on Tuesday, we got a bit of that, but in my opinion, not as strong as what their stance and conviction and statements and language wasn't as strong as what the market was anticipating. You actually kind of got language from the governor, Philip Lowe, kind of just not really kind of understanding why the market had been pricing in like such a for the RBA to kind of react so quickly. So what was the outcome of the RBA's meeting? They kept cash rate at 0.1%, which is record lows. which it's been about for about 12 months now. That was largely expected, and wasn't really a surprise, but they did abandon their yield control. So that was kind of a tool that they deployed just during the pandemic, just to kind of, help the bond yields be as low as possible, just essentially to get the economy, money flowing through the economy. So they lifted that, and they also, probably the biggest takeaway from this policy meeting was the fact that in the language, Philip Lowe did not mention 2024 was going to be the year in which they will be looking to lift interest rates. So the past few months, Philip Lowe has kind of pointed to 2024 as when they will start to ease or tighten monetary policy. However, he didn't have a year. He dropped the mention of 2024 at all. So that kind of signaled to the market that, hey, it could happen in 2023. And that was kind of the biggest takeaway. What has this got to do with I guess, the economy and such? It's just that, I guess, the sooner that central banks around the world lift interest rates rather, and tighten monetary policy by reducing their stimulus by, there's many tools, I guess not really important for the sake of this video, but I guess the sooner that central banks do this, I suppose the more expensive money will get, for lack of a better term, meaning interest rates will start to increase, and that is essentially will put pressure on asset classes like property and stocks and equities, particularly like tech stocks, which kind of have been benefiting from this, with their kind of the way that they're valued, have been benefiting from this very, very, very low interest rates. So I guess it's very important as a investor to be keeping up to date with how central banks are responding to this, because it does play significantly, and it does affect all asset classes, to be honest, but particularly equity and property. And also this week, we saw US stock markets at record highs. The Dow Jones and the S&P 500. I did see earlier today, I think it was 80% of companies that have reported their Q3 earnings. So it's reporting season in the US, for those of you unaware. And 80% of those, that the publicly listed companies that have reported their earnings, has actually been better than what the market and the analysts, the consensus amongst the analysts had kind of been predicting. So what does that mean? It essentially means that the market was, in many ways, the argument has been that these stocks are overvalued, but what you've been seeing is almost like a re-rating by the market, and to kind of basically signal that, hey, these valuations are justified because these companies are still beating their expectations of their either revenue or their earnings or profit and all of that. So it's kind of really helped propel and keep US stock markets at record highs over these past few weeks. So very notable there for sure. And I think earnings season is just about to wrap up in the US. Also last week, over in Europe, the European Central Bank, they kept interest rates on hold, and they announced that in September, they did announce last month that it would be buying fewer bonds off the back of surging inflation, because we did see in September that inflation had risen to 13-year highs. So again, that same narrative of rising prices. And the ECB president, Christine Lagarde, she came out and said she tried to play down the chances that they will lift interest rates in 2022. So again, hinting that market players might be getting ahead of themselves with their predictions. So in many ways, Christine Lagarde and Philip Lowe here in Australia have basically both come out and with very similar language just tried to, tell the market to calm down a bit, that stop trying to price in a rate hike in 2022 when we haven't really ever made it clear that we're going to do so. So that's essentially where we're at now. And I just want to finish things off with that I think in the next 24 hours or so at the time of recording, we've got the Bank of England announcing their monetary policy decisions for this month. And then also the US Federal Reserve, so the central bank in the US, they are also concluding their 2-day meeting, and they will be announcing monetary policy. So as I've covered in previous months, the language of these governors is crucial for markets. And, you know, what are they going to comment on in relation to inflation? Is it transitory? Is it here to stay? What is their language going to be like with respect to the degree at which they are, you know, stimulating the markets? Like, I'm talking things like bond buying programs. I think the US Federal Reserve is expected to either decrease their bond buying program, so I guess not be as intervening in the markets. So all of these decisions are driving markets at the moment, and in all my time, I've never seen so much weight by the market placed on language by policymakers. It's really quite something when you see markets moving within seconds of them either stating something explicitly or inferring something by not mentioning something, which is, as I covered earlier, exactly what Philip Lowe did yesterday by not mentioning the year 2024. And within minutes, you saw the Australian dollar go down by like a cent, or not quite a cent, but a bit under that. So yeah, the market's definitely hanging off of every word that these policymakers are stating. Okay, on to the crypto news for the week. And wow, this morning, enormous news that definitely took me by surprise, and I dare say many industry participants were surprised by, I suppose, not so much the nature of this news, but I guess I think it was always going to happen, but the fact it happened in early November 2021, I definitely wouldn't have expected. What am I talking about? The Commonwealth Bank, so Australia's biggest bank, for those of you unaware, international, announced this morning that it will become the first bank in Australia to offer customers the ability to buy, sell, and hold crypto assets directly through the CommBank app, so available on iOS and Android. This announcement was made in partnership with Gemini, so one of the biggest crypto exchanges in the world. I believe they expanded to Australia either earlier this year or late last year. And it was also made in partnership with Chainalysis, a very one of the leading blockchain analytics firms in the world. I believe they are based in the US. So yes, this will be rolling out in the coming weeks, and the CBA intends to progressively roll out more features to customers next year. As I've kind of commented on in previous months, they're kind of going with the classic lineup that you see when you see either banks or brokers announcing support for crypto assets. So of course they're supporting Bitcoin and Ethereum, but you always inevitably see, for some reason in 2021, you still see Bitcoin Cash and Litecoin be among basically always, they are always a part of the launching, 4, 5, 6 assets, which still like humors me to this day. I think Bitcoin and Litecoin they must be like, I don't know, about 18th to 25th, something like that on the rankings by, at least by market cap rankings on sites like CoinGecko. And they've been slipping in the rankings basically all of the past 12 months, but who knows, CommBank users will at least be able to get exposure to them if they choose. But all the focus here is at least on Bitcoin, to be honest, and slightly less Ethereum. okay, so like why is this such big news? It's like, hey, it's just another bank. Oh well, not just another bank. I think we've had, okay, the past 12 months we've had huge rollouts of brokers that have been announcing support for crypto assets. So letting their users, what do I mean by that? Just letting their users buy and sell cryptocurrencies. So we've had like Revolut, TD Ameritrade, Charles Schwab. eToro has been kind of one of the longest ones of the major retail brokers. But in terms of their brokers, but in terms of banks that have announced support, like letting their customers, natively buy and sell cryptocurrencies, that's not as common. And if it is announced, it's typically by like one of those like new age kind of banks, the neo banks, so like a challenger bank, they're also called. Essentially, it's just a competitive, like a play essentially to acquire users that have been demanding crypto. So this is significant news because this isn't a broker, this isn't a challenger bank. This is Australia's biggest bank and really one of the biggest banks in the world. So it kind of like, I did see a comment earlier today that you'll see once CBA roll this out and once Square, who is a payments giant in the US, they recently acquired Afterpay, which is a huge buy now, pay later company. Once Square finalizes that acquisition, you're actually going to have the biggest and second biggest publicly listed companies in Australia, that being CommBank and Square, who will list soon on the ASX. You'll have those two, both of them supporting cryptocurrency, which is mind-blowing, to be honest, to be saying that in November 2021. So yeah, this has kind of come, as the CEO of CommBank said, it's kind of just been a result of like consistent demand by users, and they've seen their customers continuing to, I suppose, joining crypto exchanges and brokers, essentially withdrawing their money from CommBank and into all these other venues. So CommBank has essentially decided to build this out, internally with some help of partners, and make that available natively to all of their users. So, will this trigger the likes of Westpac, ANZ, and NAB to roll out support for cryptocurrencies? I'd say if they weren't planning to do so already, it will accelerate their plans to do so. But CBA being the first is definitely going to definitely help them capture a lot of the crypto fanatics here in Australia. And it's just a continual kind of warming to crypto, and a really just significant moment of validation for the entire industry. We've seen banks in Australia being involved in blockchain for several years now, like about 5-6 years. They've been involved in either these Australian banks, venture arms will have invested in blockchain startups. I know there was, I think it was out of Westpac, they had a very, very successful venture arm that essentially was a very early investor in Coinbase, and they are now they're now their own entity, I think Reinvest or Reinventure, something like that. But yeah, whilst the Australian banks have been warm to blockchain, they haven't been so much to Bitcoin or cryptocurrencies. So this is also a huge, I guess, shift in that kind of, I suppose, approach and level of comfort with the asset class, which is a huge signal to the public that I guess crypto assets are here to stay. Sticking with the bank adoption news in the crypto space, there was also news in the past 24 hours that Thailand's oldest bank has acquired a majority stake in what is the country's largest crypto exchange called BitCub, BITKUB. So that was a 51% stake there. So just more adoption by, I guess, traditional banks and the traditional financial system, gaining exposure to crypto exchanges or to the crypto sector, whether it be in this case by like an M&A kind of approach, or launching something natively, such as what we've seen with CommBank. So many ways that the banks are kind of getting involved in crypto. But coincidentally, this news rolled out like not long after CommBank, and it is kind of going to kick off, in my opinion, or not kick off, but it's a continued shift in what I want to talk about at the moment, which is you're seeing these legacy banks kind of, warming to crypto and getting involved in that. And on the other hand, you've got these crypto exchanges, these centralized crypto exchanges who are launching and venturing into, banking-like activities and banking-like features. So you got them essentially like CommBank, the likes of CommBank and crypto exchanges like coming from both ends and like colliding. And you're going to see the biggest benefactors of this will be users, because they're going to compete so much with each other and force each other to essentially lower their rates on things such as offering lending and borrowing services to their users. And that is what we saw this morning with Coinbase. One of the most recognizable names in the entire crypto industry. They announced that eligible customers can borrow up to $1 million from Coinbase by putting down their Bitcoin as collateral, and essentially, and borrowing money or borrowing US dollars from Coinbase, which is more of a banking kind of, I guess, an activity that is more, you would see more in a traditional bank. You're seeing that now come from the crypto exchanges themselves. And this is something that will definitely, in my opinion, continue into 2022 and 2023, and it will benefit. It'll just put so much competitive pressure on these providers to offer the best rates for consumers. All right, onto some adoption news. And Burger King, a huge fast food chain, they partnered with Robinhood Crypto. So Robinhood, one of the biggest brokers in the world, their crypto arm. So they partnered with Robinhood Crypto to give away a range of cryptocurrencies. So almost $2 million US worth of Bitcoin, Ether, and Dogecoin combined. So again, just all these, retail and high profile names, corporate names, trying to just get, I guess, launch some marketing activities and spend a bit of marketing budget on things to do with cryptocurrencies and NFTs, which we'll get to soon. So here it says the cryptocurrencies will be given away to Burger King's Royal Perks members, a loyalty program where members get to earn crowns for every dollar they spend on fast food items. The crowns can be redeemed for more fast food items. Okay, just onto some regulatory news for the week, and the US Treasury released a report on the risks of stablecoins. So the risk posed by stablecoins on financial markets and the broader financial system in the US. For those of you unaware, stablecoins are essentially tokens or cryptocurrencies that are pegged or tethered one-to-one by some sort of reserve. Well, at least the most popular ones are tethered one-to-one with US dollars. So if there's Tether is the biggest stablecoin. So what makes that a stablecoin is you would have $1,000 in the bank by this Tether company, and that means that they could have 1,000 Tether stablecoins. So they're always redeemable one for one with US dollars. The benefit of them is that they are essentially allowing fiat money to exist within the crypto world or crypto universe, and it really cuts down on transaction fees and conversion fees significantly. And we've seen stablecoin the whole value of stablecoins has exploded to about $130 billion at the time of recording. So there was this report released on, hey, how risky is this and how much of a threat does this pose to the US? And the report essentially recommended that Congress in the US come up with some more laws on regulating these issuers of stablecoins. So, Tether has a company that is responsible for issuing stablecoins, and all of the centralized ones do. Like Paxos is another. You got the Center Consortium, which is behind the USDC stablecoin. That's run by Coinbase as well as Circle. So essentially that was the biggest outtake. There was a lot of kind of rumors and speculation before this report was published. And the takeaway and what's important for you to understand is that none of those rumors were really that they didn't really come to fruition, and the report, there won't really be any immediate ramifications from the report. It was more a recommendation that, hey, Congress needs to do something and start regulating these stablecoin issuers. Otherwise, there's going to have to be more oversight by agencies and federal agencies such as, the Securities Exchange Commission, the CFTC, not so much the CFTC, but yeah, other federal agencies. And yeah, why that's not good, because these agencies, or at least the people running these agencies, they're not democratically elected. They're more just appointed by whichever party is in, essentially the president basically, and their party appoints these people who are in charge. So they're not really elected by the US in this case. So it would be a lot more democratic if these decisions on how to regulate stablecoin issuers came from Congress itself. So that's essentially what the recommendation has been here. And yeah, I expect to see more of this, more discussions on stablecoins as the whole market kind of grows. But for you as an investor, it's important to keep up to date with essentially anything out of the US to do with regulations of anything crypto related. Whilst it might seem a bit unimportant, stablecoins, they're actually a lot more important than I think people give them credit for. In the crypto industry, they're almost like the lifeblood of markets. So many exchanges have cryptocurrencies that trade against a stablecoin, and they're basically, yeah, as I said, just the lifeblood of how the markets work and how the markets are structured in the cryptocurrency space. So if there were any, really prohibitive regulations announced, that would actually, in my opinion, really spook the markets and would actually cause a heavy sell-off in the markets. But that's not what we saw. And of course, obviously, there's always this question in the background of, hey, how do you actually enforce these regulations on what are in many cases global stablecoins? But that's something that I won't get into in this video. But yeah, that was the first of a very important regulatory report that was released last week. And another one was, finally, we saw the FATF, or the Financial Action Task Force. So this is more of a global entity, which is more responsible for issuing guidance on ways to counter financial terrorism, and ways to counter anti-money laundering, or to counter money laundering. Importantly, this body doesn't actually create legislation. They more just publish guidelines, but you'll typically see a lot of kind of neutral countries, such as Singapore and South Korea in particular. They will kind of they often like really do follow what the FATF kind of suggests or recommends, and you kind of see that indirectly in many other countries as well. So anything they publish to do with crypto, again, important to be keeping up to date with. This was more of just an updating of a previous report that came out. I think it was over 100 pages. Essentially, the big takeaway here was that DeFi or decentralized finance was now included in the guidance of these. I suppose the guidance meaning to kind of have policies and procedures in place of collecting data that's to do with, I guess, know your customer, and essentially to know where value is flowing in the crypto economy. So again, imposing policies and regulations on DeFi entities is kind of a bit of a misnomer, because decentralized finance or decentralized protocols in theory are not controlled by any one entity. However, in this young stage of DeFi, they still in many cases are a lot more centralized than probably what the term DeFi actually kind of lets off. It'll be interesting to see, the response to this report. Again, countries can just ignore it, but you'll typically actually see them respond to it. So that's probably going to be happening in the coming months. These things typically move very slow, but I did just want to mention it in this week's update. Okay, back to some adoption news, and definitely signs of December 2017 coming into play here with, there were 2 crypto apps that made the number 1 place. So first off, we had Crypto.com reach the number 1 ranking on the Google Play Store in the US. So that was one data point there. And another one was Coinbase. They reached the number 1 spot in the App Store in the US. So it's always worth noting this sort of stuff. It can seem kind of, not super important like in and of itself, but if you see enough of these kind of stories popping up, it can be indicative of some sort of, I guess, the market kind of becoming a bit like towards the euphoria stage. So it's definitely worth just like being clued into these sorts of stories. I don't think we're there yet, which I'll get to at the end of this video. But I did just want to let you know that, hey, this crypto has kind of, I suppose, hit the mainstream in a big way relative to, I guess, any other time this year. And just continuing with just more data points along that same line, FTX, a really big crypto exchange, they will advertise for the first time during the Super Bowl in a few months. That will be to reach mainstream football fans. So Super Bowl ads, as we know, get so much coverage all around the world, and some people will watch the Super Bowl just for the ads. And it just kind of is a continuation of FTX in particular, really, really trying to push the mainstreaming of crypto. You've seen them sponsor like so many different high-profile, sports stadiums or athletes or esports kind of organizations. And I guess this message or this latest news piece that they got a Super Bowl ad slot is just a continuation of that. So important to note of just how much money is getting pumped into, I suppose, efforts to help crypto gain more awareness from the public. Okay, onto NFTs here, non-fungible tokens. It's actually been interesting to see. The crypto markets are super hot right now, and you're seeing NFT prices actually go through a bit of a fallback in prices after a historic run up. Like, it's worth noting, but still interesting to note. Like, nonetheless, we've seen the continuation of like some of the biggest NFT news really in the past 7 days, and despite the NFT market going through a sell-off. So what are some of these stories? McDonald's has launched an NFT. So wow, one of the most high-profile corporate names in the entire world. They released an NFT that is acknowledging the McRib's 40th anniversary. So you can see, for those of you watching me at the moment, there is a GIF there of the McRib NFT. Not sure if the owners get any sorts of perks from owning this, or whether it is just a status symbol, which in many cases the most popular NFTs have been kind of status symbols, and then they kind of become to something else. But to see McDonald's kind of even just getting involved in NFTs at all is something. If you told me 12 months ago, I would have believed. But yeah, here we are. Speaking of high-profile names, Adobe, enormous company that's behind Photoshop and many other whole suite of software that's used by creatives to produce like digital art and videos, things like that. They have partnered with Rarible, so a really big NFT marketplace, and they are going to allow token creators to display the software, to display Adobe's content credentials to verify the authenticity of whatever digital content they create. So I think I did see a demonstration where they can essentially right click on, once they have finished creating their digital art, so just say they're making an illustration in Adobe Illustrator, they can essentially it's something like export as NFT or save as NFT, and it will automatically, I guess, assign or save the metadata associated with that file. And for those of you that aren't really involved in the NFT space, that metadata and I guess authenticating that is kind of one of the huge selling points of NFTs. It's a way to I guess cryptographically prove that, hey, I am the owner of either this only piece of digital art in the whole world. There might just be one, or it might be, hey, I'm proving that I am the owner of like one of 20 of these digital art pieces. So to see that integrated by Adobe is again just like massive news, and really, really exciting to see. And again, the whole purpose of this is they're helping to fight misinformation with attribution and verifiable truth of content. So content could be, to be honest, like it could be a video, it could be a GIF, it could be an image, it could be a song, a poem, it could be like a title of something. I guess the thing with NFTs is a lot of people just think of them as digital art, but one thing I'm super excited for is just to see these other media types really start to find their place in the NFT marketplace and NFT industry heading into the end of this year in 2022. I know music, like songs and photography, is one that I've personally seen really start to launch more and more of in the NFT space in the past few weeks, and that's something that I think will be the next kind of wave of, I guess, participants and people, creatives, kind of joining the NFT space. More adoption news here for NFTs. The Matrix Resurrections avatar NFTs will go on sale for $50 each ahead of the movie's premiere. So there is a Matrix, the Matrix Resurrections is a new movie coming out. The Matrix fans will all be very excited for. Warner Brothers is behind that movie, so they've teamed up with Nifty's to launch this. So there'll be 100,000 unique Matrix inspired avatars. So Nifty's is another kind of entity in the NFT space that it's been a bit more behind the scenes this year, but they have got some really good backers. From memory, and they did acquire, I think, Meme Protocol earlier this year. So this is kind of, it sounds like Nifty's kind of one of their huge, making a big splash to kind of make a name for themselves. And yeah, to see, I guess, the utilization of NFTs to help launch a movie is just something that we'll continue to see more and more of. We saw this happen earlier this year with Space Jam. They did a similar thing, and I remember that website just continued to crash like on launch because so many people want to get their Space Jam NFT, and this will be definitely a similar thing happening for Matrix. And also today in NFT news, Quentin Tarantino, he is deploying some or launching some NFTs. He is set to release a collection of 7 NFTs that will consist of never before seen handwritten scripts and commentary from Pulp Fiction, the award-winning. It was an award-winning movie that many people would be familiar with. This is actually, unlike many NFTs which are deployed on the Ethereum blockchain, this will be launched on the Secret Network, which many of you who have been in crypto for a while would know. That Secret Network rebranded and they used to be called Enigma, like ENIGMA, which is, they were one of the first kind of projects to kind of work on Ethereum. So they've been around for a long time, like a privacy oriented blockchain in this case. So big news for, I guess, the Secret Network ecosystem as they kind of start to ramp things up. Is there any benefits that the owners of these get, or is it just for status? I think you get some things that they've never before been revealed to the public. And it's kind of just showing off, I guess, Secret Networks have their own, I guess, type of NFT, which is called a secret NFT, which it will also be an example of that as well. So that will be going live on OpenSea in the near future. Okay, what was the biggest news in NFT land from the past 7 days was kind of a result of Facebook. So many of you know who Facebook is. They rebrand their corporate name to Meta, META, to focus, I guess, to kind of convey the fact that they will be, strategizing and venturing out to build a metaverse, which is kind of a virtual reality based universe, for lack of a better term, which you can do things, such as attend events with your friends, catch up with your friends, meet people. It's basically like Second Life, if you're familiar with that. So there was also confirmation by a Facebook, I guess the head of their Metaverse project, that NFTs are actually going to be involved in Facebook's Metaverse. I did want to stress that the Metaverse will still be, Facebook's or Meta's Metaverse, if that makes sense, will still be like controlled and operated by, Meta, the company, which is distinct from blockchain-based metaverses that we're familiar with, like Decentraland, Somnium Space, the Sandbox. So I did just want to stress that. However, they did, mention that NFTs are going to be a part of their plans for the metaverse. So this was huge news for the NFT space, because it really just puts this concept of the metaverse, it really just disseminates it and throughout the public, and it'll just familiarize a lot of people with the idea of what a metaverse even is, which definitely helps with the messaging by NFT projects or NFT gaming projects or metaverse related projects. It definitely helps them, I guess, communicate to I guess the average person. This news kicked off a huge re-rating in all metaverse related projects in the crypto space. It was a bit irrational because Facebook didn't necessarily announce anything to do with these projects, nor did they really announce in at least in from my reading, they didn't announce anything to do with blockchain or using Ethereum, for example. But I suppose this re-rating was more of a consequence or a result of what I just spoke about, that it kind of just made this concept of the metaverse, I guess, a lot more familiar of a term throughout the world. So in that case, it really did force a lot of these, as you can see here, a lot of these NFT related, metaverse related cryptocurrencies like went on an absolute tear last week. Like Decentraland, probably the most well known, to their Mana token, MANA, that went up by that did 3.5x in the past 7 days, or 250% growth. The Sandbox, so it's a Sand token, went up 240%, or 3.4x. Red Fox there, Somnium Space. So just like some tremendous growth, which was again just kind of weird to see how crypto markets work during bull markets. Like crypto investors and traders can get a bit carried away, which can then lead to a kind of like follow the leader kind of approach, and this kind of mimetic trading where people just buy into an asset because other people are. And yeah, you kind of have seen, so well done to anyone who was holding these tokens. But I guess it's just like, to put it briefly, it's essentially just more validation that the concept of a metaverse is something that is going to be around, whether it's in a centralized fashion or decentralized fashion. In my opinion, it'll be both. But the fact that a centralized company is doing it kind of gives validation to the fact that it's a worthwhile pursuit. So yeah, very, very exciting. And then this kind of kicked off, as I said, just a lot of, not copycats, but you kind of saw now just in the past few days a lot of big high profile corporates announcing metaverse related things. Could just be a coincidence, or just could be the mainstream media picking up on metaverse related announcements as well because of how big Meta's announcement was. But what did we see here? We saw Nike file 7 trademark applications as it prepares to enter the metaverse, and I believe they put out 2 job ads, 2 job postings to do with hiring. They're hiring a virtual material designer. I swear. Yeah. Director of Innovation Engineering and a Director of Metaverse Engineering. So yeah, plans by Nike. They're not super concrete yet about what their plans actually are, but yeah, dare say NFTs will be coming from Nike, and even plans to integrate in the metaverse with whether it's a blockchain based one that exists already, or whether Nike will actually create their own metaverse, which is probably a bit more of a stretch. I definitely think it would be the former. So that was exciting. We also saw Microsoft Teams, Microsoft, they're one of their products, Microsoft Teams, which has exploded in usage in the pandemic. They are also entering the metaverse race with 3D avatars and immersive meetings. So, all of these companies are essentially seeing the benefits and the way things are going, and they're essentially trying to, stake their claim in being a leader in the metaverse, in developing their own metaverse solutions. I think this term metaverse is already starting to be overused, and will definitely kind of force the blockchain and crypto ecosystem to question whether the use of metaverse is entirely accurate, because these metaverses that Microsoft and Facebook are creating, and maybe Nike, or not Facebook anymore, but Meta, arguably, they are totally different metaverses, as I said before, to the ones we call metaverses today in the crypto world. So I guess that's more of just a commentary, but the takeaway from this is just a huge, I guess, moment of validation as well to see Microsoft getting involved. And just on that, we saw the Melbourne Cup was run yesterday in here in Australia in Flemington. So it's a horse race for those of you unaware, and there was a huge collaboration with the Victorian Racing Club, which is, I guess, the administrator and organizer of the Melbourne Cup. They partnered with Virtually Human Studio, which is the entity behind the very popular NFT horse racing game called Zedrun, Zedrun. And they brought the Melbourne Cup Carnival to the Metaverse, and I believe they had that was in Decentraland, if I'm not mistaken. And they even got DJ Havana Brown on to perform in the Metaverse in Decentraland. And yeah, it was just to see this stuff kind of coming out with such high profile names like the Victorian Racing Club getting involved. Was just super exciting to see, to be honest, and I think it's just kind of a sign of things to come with many sporting organizations getting involved in the NFT space in some shape or form. So I'll drop the link to this in the show notes for anyone who wants to read a bit more about how this worked. But yeah, I thought that was definitely worth mentioning. Okay, moving on to the crypto markets. And as I said earlier off the top of the show, the Bitcoin and ETH prices are... ETH is at all-time highs at the time of recording, but Bitcoin is not too far off. It hit that on 20th of October, but has, again, as I said last week, has kind of held up at impressively, in my opinion, above 60,000. Typically, when you see Bitcoin record new all-time highs, it's not uncommon to see a 20%, 30% sell-off in the short term. But we only ever got, it went under 60,000 briefly. So that was a 10% sell-off, and essentially that's as bad as it got. So that was very reassuring for myself and other Bitcoin investors, because we're seeing on-chain signals of just the old long-term investors not really selling yet. And in my opinion, things are, before the end of the year, and perhaps even in the next week or two, we will see Bitcoin, surpass all-time highs. And I think there's still another leg to go in this bull market. I think we're definitely reaching the end of this cycle. Just my own, discretion, and just the signs I'm seeing with the amount of coverage in the mainstream, and apps reaching number one in the App Store, and huge advertising campaigns for crypto. You don't really ever see that stuff near the top of the bull market. So that's kind of just my own thoughts there. But I still think before that peak, there's going to be another huge rally higher for Bitcoin, ETH, and all other cryptocurrencies. So in the case of Bitcoin, those long-term trends or moving averages, 50, 100, 200-day moving averages, are all still well below Bitcoin's current price of $62,900 US, and the relative strength index is currently at 60, so well below overbought territory there. As I said, ETH, just before I recorded this, did hit a record high price of $4,600 US. So very exciting stuff there, and that continues to trade well above those three moving averages as well. And it's on the RSI, it's a bit more towards overbought territory than Bitcoin on the daily time frame at 66. But yeah, some argue overbought territory is above 70, others say it's above 80. So regardless of that, it's below overbought territory at the moment. And we did see other, blue chip altcoins also reach all-time highs in the past, I guess, few days. Polkadot being one of them. I think they've got a really, as I've said in previous weeks, they've got a really, I guess, strong wave of news, fundamental news coming up, actually finally getting their parachains launched. So I'd expect, as I said in previous weeks, I'd expect that to really outperform the market over the next few months, and that's already started in the past few days with it reaching all-time highs. Solana, just before this recording, also hit all-time highs of, I think, $228. So, as I said, I think this market still has another strong rally to go. And then I would start looking at, preparing for like a bear market. I'm happy to take some profits after this next leg higher. I'm happy to take profits even if we do go another leg higher. I'm willing to kind of cut my losses and forego that potential missed opportunity, if it means, actually realizing some profits, which, many people, including myself, have been through in years past, kind of gone through that situation of seeing prices really rally higher, hits euphoria, and then you don't really have a plan of like when are you going to sell, and then you eventually see your holdings basically go all the way down back towards the amount of money that you put in initially. So I definitely don't want that feeling again. So that's why I will be taking profits after this next run up higher. But that's just my opinion anyway, and my personal approach. One last thing I wanted to comment on is, I think, as I said, I'm still short-term bullish on EVM compatible chains and their native tokens, such as Phantom, Terra, Avalanche, Polkadot, even Secret Network as well as another one, Harmony, Near Protocol, Polygon, which is kind of tied to Ethereum in many ways, even Binance Smart Chain, even though it's a bit more, I guess, established. Why am I still short-term bullish on them? Basically, it's because Ethereum continues to struggle from, historically high gas fees, which just prices out the everyday user. So you'll see them go to, the likes of Solana and all those other chains as well. And then secondly, I also think these other blockchain ecosystems are really deploying their war chest of capital at a really opportune time. And on that note, we did see Avalanche, I think 2 days ago, announced yet another incentive, or I guess, subsidized program. This time it's a $200 million Blizzard investment fund, which is going to be an early stage investment firm and incubator. So that is, like, Avalanche are throwing the kitchen sink at acquiring users and developers at this stage. We've seen they've got their Avalanche Rush incentivization program that was announced a few months, maybe 2 months ago or so, but I think has been widely misunderstood. I think a lot of people think that Avalanche Rush program has kind of come and gone, but we really have only seen a portion of that 180 million in liquidity mining incentives used for the time being. So I think with that also being denominated in AVAX, the Avalanche native token, I think that that $180 million liquidity mining would definitely be worth a lot more than that now. So Avalanche, I'm just using that as another example because they announced that 2 days ago. But to be honest, all those blockchains I just named have got, in one way or another, Cosmos is another one, that have some sort of incentivization program. So I guess they're my two reasons. These incentives programs, in combination with Ethereum gas prices being so high at the moment, is why short term I think these tokens will outperform ETH. But in saying that, like, I still have ETH as like that's still one of my favorites, and I think long term and medium term even, I'm so much more convinced, higher conviction in holding ETH as opposed to the tokens of any of these other chains I just mentioned. So that's just my opinion. That's where I'll wrap things up. As I said, I'm also just keenly awaiting the launch of these Ethereum scalability solutions. So there's about 4 or 5 that are either getting an upgrade or are launching for the first time in the coming weeks. Like ZK Sync, Immutable X, Optimism's getting a big upgrade. Arbitrum is getting a big upgrade as well. So yeah, that will be exciting to see. Hopefully the Ethereum fees, gas fees go down. But in the meantime, a huge opportunity for these EVM compatible chains and like rivals or competitors to Ethereum, and then their token ecosystems as well. So that's where I'll wrap things up. Never been so excited to be in the crypto industry. Definitely seeing a lot of not just prices going up, which is great, but you're actually also seeing corporates and the traditional legacy world and creatives, artists also now benefiting from these solutions that are built on top of blockchain technology. That's why am I so excited? Because that then brings more people into the whole, I suppose, crypto universe, for lack of a better term. And yeah, that's what's got me excited at the moment. So I'll leave things there, and enjoy the rest of your week, and thank you for tuning in.